Hello, welcome everyone. Just wanted to give a quick video update on performance of the markets and the Algo Optimizer. Go through a couple trade setups, both short-term and long-term, as we head into the last week of not only the month, but also the second quarter. So we're going to start looking at a few items as this week concludes, because next week we'll do our analysis. And what we like to do is checking out the numbers or the science behind the person methodology. With that said, remember, next week we're gonna be coming into a new week, a new month, a new quarter. So we want to look at quarterly pivots, monthly analysis, and weekly analysis, and see what does the market hold for us as far as momentum, volume studies, and relative strength as we look at the top sectors. We're going to be doing a webinar next week, so look in your emails for that. I think you're going to want to attend that. In the meantime, you also would know that as we end the month of June, the first thing that's coming out in the middle of next week is the 4th of July. So a lot of things are coming up that are changing in the next few weeks. Before we begin, just take a moment to read this risk disclosure statement. Remember that trading involves risk of loss. Thank you for your attention to that particular disclosure. Now, here's crude oil, and again, this is today. This again was Tuesday, the 26th of June, and I mean, I have no other words than to just remain in awe of the power behind not only the markets, but the Algo Optimizer's ability to pick up trades. Now, this particular setting allows us to take longs in the market and trails the stop. As you will see, it takes a long position. Here's one that lost a little money, and then it got back on the horse and it got out with a small trailing stop profit. And then finally, as you'll notice, that right around 11 o'clock in the morning, a major buy signal ensued. Now, what's neat about this is I want to include the idea of where your indicators come into play. First and foremost, as we start to see the market shift lower, look what's happening as the price shifts lower. The momentum behind that in the volume is moving up. So it was not a decline that should have been sold. It's a decline that was on extremely light volume. Even the person histogram, which is a momentum indicator, was showing that there was positive momentum building in the market. Now, if we expand this up just a tad, if I may, note that as the signal is generated, look at the momentum. It went positive right at the coincident factor of what? The PPS buy signal. This gray line in the sand is the last conditional change. So it closed greater than a resistance with a PPS. We would consider that also a small trilogy. It broke a little down trend line. It took out the last conditional change resistance. It closed greater than. It generated a buy signal. The momentum of the volume was positive. The histogram momentum was positive. On balance volume, not really reflecting a huge change. Obviously, you can see that the person volume indicator gave a much better defined and earlier detection of a change or pickup in momentum of volume as this market was basing out here. So this was an exciting little opportunity for a buy signal. And as you can see, amazing things happened. It kept moving up, and using the trailing stop function, it moved the stop from the red line as the risk to these white lines, which is a last conditional change. And so as you can see, it just kept moving the stop up, moving the stop up. The market still held in its time frame, and then this red line pops up. Why? Because the red line signifies that a market generated a sell signal, but you're still long the market. And if it takes out that low, it will get you out. And look what happened. The very next bar, it took out the low and it took you out of your long trade with an incredible healthy total gain on that one trade using two lots in the ES of $3,300. In fact, if we take a look at the trade, you'll clearly see this is amazing stuff as far as Algo Optimizer. That was the trade right there. It got in at 68.57, out at 70.23 for a net gain on two contracts of 33.20. So it's a nice entry and identification, at the very least, of knowing when not to be short and when to be long, and also when maybe to get out of the trade. Now, as the last conditional change got you out of the trade, notice that nothing really happened in the market for almost 2.5 hours. And then finally, right at 2:30, it generated another trade and an ensuing small profit target. This system does not take trades past 2:35, so once it gets out, it won't take a new trade. Now, after the market closed, API came out and it showed a bullish energy report, so we'll see what's going to happen in tomorrow's trade. But my suspicion is that based on the technical indicators and the volume here and the momentum, the market's a little overbought and overstretched, and therefore we're more than likely to see on overnight action and maybe in the European session a small retracement. My guess would be minimum objective, not a hard thought, of a pullback to like between 69.80 to 70.20, somewhere between that breakout and this average low in here that we saw at in the 12:30, 1 o'clock into 2:30 time period, that area of longer term support. So that's where I would expect a small retracement coming in the evening session tonight. So for traders that are active and you get a chance to watch this early enough, that's what I'd be looking for. A. All right, B. Let's take a look at higher degree time frames. I want to alert everyone that this week in the Thoughts and Observations newsletter, again, fantastic stuff happening here. And when I say fantastic, I mean this year we've had a pretty good, we average more than a trade a week. Our current positions year to date cumulative only up 91% versus the S&Ps. We've taken longs. We haven't taken that many shorts this year because there hasn't been a lot of opportunities for shorts. And as far as option trades, we've been more prone to be into equities rather than options this year. So we haven't been immune to taking option strategies in the newsletter, but a lot of them that we've put out haven't been filled. That's not to say that our live trading room hasn't done a lot of option trades, but we have, and they've been fantastic. Namely, great calls like the calendar put spread in NVIDIA, or looking at the short straddle in NVIDIA. So between Netflix, NVIDIA, and the list goes on and on, I'm really happy to really apply the science behind this methodology. And the science suggests, as we wrote this particular week, just to share with you, one of the observations was we haven't really talked a lot about it, is Bitcoin. And I pointed out that GBTC has monthly support at 903. Now I want to look at that just a little bit. This week we had a lot of bullish signals, by the way. Mostly were bearish ETFs, and we tried to get in on a bearish ETF play with SPXX. This trade was Acceleron, which didn't work out too well. And then new shorts, try to get in on a split fill on Adobe. May I also point out that this particular week, when we're talking about a market to go down, I find the irony that in past market corrections, we've seen a flight to quality of people buying not just bonds, but also Bitcoin. It hasn't worked this week. So something else is going on in the Bitcoin world. We're seeing a decline in valuation. But may I point out, this is a very important pivot support, 903 in GBTC. So whether you're trading the Bitcoin ETF, it's an over-the-counter trade, OTC. So whether you're trading this, keep in mind you can use this as a proxy for maybe a trade in a Bitcoin futures or spot Bitcoin trades. I want everyone to focus in on something using my indicators. The histogram is showing a little bit of bullish convergence, number one, and my specialized volume indicator is also showing bullish convergence, which means as the price goes down, when it hits near that support of 903, you probably want to look for a recovery. The fact that this is a sell-off coming in the last week of the month and the last month of the quarter may be just a quarterly liquidation of a fund who may have been in the trade that's losing and they're getting squeezed out. So watch for that 903. We're darn close to it with mitigating convergence patterns, both in volume and price momentum using my histogram. So I wanted to bring that to your attention. Also, let's take a look at, I've been doing a lot of work with Apple. Many of you have been seeing videos. I've had a lot of trades with Apple. and because it's been giving some really fantastic signals. And so looking at Apple, here's what I'm suspecting is that we're going to see in the third quarter, that's this next preceding 90 days, I believe that we're going to see a downturn in Apple prices, more than likely. I think by the late September, early October time period, we're more than likely to see a move back into the 160, 150 price area, somewhere maybe testing these lows that we have seen in that moving average cross. Why? This is a weekly chart on Apple. The momentum, we are losing the strength of the rally. We did get a weekly low close doji, even though we have a kind of like short recovery from this week in Apple. I think over time, rallies are going to be sold. I'm looking at Apple as, for whatever reason, a longer term distribution. And why do I say that? Because the relative strength, the person market catcher, is weakening on each subsequent rally. That's number one. Number two, the momentum of the price gain has lost its positiveness in the price move. And third and final analysis is that the volume action is deteriorating. Each subsequent rally is on a decrease in percent change of its volume. So it's more indicative of a distribution rather than accumulation. They're not really forcefully buying the dips. It looks like over time we're seeing very sneakily distribution near the highs, as if someone's trying to sell every time it gets near the 185, 190 area, that they're trying to sell and liquidate a portfolio of a large position over time. So let's back test that, or at least see if we could substantiate that statement by looking at a higher degree time frame monthly chart. And when you look at this monthly chart, gang, I would say, wow, nice rally here. How come we've seen in the past where the open-close relationship and we see a defined uptrend? Now, we've been kind of in a sideways range with every subsequent upside move being sold off, and you see that by the long shadows. We did get a sell-off in the market, rebounded close to the highs. But was there any strong follow-through? No, it was preceded by another downdraft, and the market came down, and then again, every time the market's gotten near those highs, we've seen a sell-off. Now, here's the killer. Except for last month, the market rocked the world and went up and closed at its highs. But that doesn't mean that the next month, and this is now, and we're going to conclude this month, that this is the first time we didn't get an equal and opposite. But look at the volume. It's also the first time that there was no aggressive comeback in the volume. In fact, each subsequent upside move over time has been met with deteriorating volume. In fact, if you look at my volume indicator, it shows more of a distribution and heavier selling pressure coming in on the market on down moves than on up moves. In fact, the momentum of the volume is still negative, even with last month's uptick. So that to me is a very dangerous side longer term. And if Warren Buffett let the world know he's long, who's to say Warren Buffett isn't the one that bought in at maybe 150 and he's trying to take a profit? Or maybe Warren added to his trade and he was in it earlier at maybe the 120 handle and taking some profits off the table. Is it not to say that if it did drop back to the 150, Warren wouldn't come back into the game? Probably so. But Apple has, as we enter the third quarter, it is set up with a very distressed volume tone on a longer term pattern. So I want everyone to kind of watch that. And what you need to focus in on would be the daily charts to see how the subsequent rallies, if we see an increase in the positiveness of the relative strength, if we see an increase in the positiveness of volume accumulation, as it is right now, all the indicators and my specialized proprietary indicators from my volume indicator are all negative. My relative strength is negative. My histogram is negative. And man, that is not a positive sign to want to be buying Apple on a dip. Anyway, this is what we talk about, the science behind the methodology, rather than trading on the seat of our pants, using the momentum and other catalysts and market measurements by relative strength percent change of a product versus the S&P, by looking at volume not in absolute terms but percent change terms and the momentum behind that. And that's the specialty between looking at these specific indicators. So as we enter the third quarter, I'm expecting to see maybe more rotation, some out of some of the tech names, and especially there could be an issue with Apple going forward. I hope you enjoyed this video. Sorry to be long-winded about it, but I think it's important to share what we don't really tell the general public a lot or enough about is what is behind these specialized volume indicators and why are they so much better than the old school stuff like on balance volume. It's because we've developed these indicators with a new way of measuring old school technical analysis, and that is instead of looking at volume in absolute terms and assigning a positive update with the entire volume, we look at it in terms of percent change. Anyway, I hope you enjoyed this video, and we'll look forward to putting out some more to help you guys get better at your trading progress. Thank you.